Hi YouTube, welcome to day 2 of Blueprint Profitability series. So today we are talking about something every trader must understand, and that is trends. So if you don't understand trends, you will always enter at the wrong time and get trapped and lose money. So let's break it down in the simplest and the most professional way. Trend shows you who is in control, buyers or sellers. So bullish trend means buyers are in control. A bullish trend means buyers are stronger than sellers. Price keeps pushing higher and dips get bought up. So the market creates a series of higher moves. Simply, buyers are winning. Bearish trend, sellers are in control. So simply, a bearish trend means sellers are stronger than buyers and price keeps dropping. So pullbacks get sold and the market creates lower movement. Simply, sellers are winning. Another thing to understand is even in a strong bearish trend, you will see green candles forming. A downtrend is made of two phases, okay? So the second one is impulse, strong moves down created by sellers, and the second one is correction, smaller pullback created by the buyers. So this means buyers are always in the market, but during a bearish trend, buyers are not strong enough to reverse the direction. Their job is only to create temporary pullbacks. So when the market is falling, don't be confused when you see green candles. That's completely normal. It's just the correction phase, not a trend reversal. That's why a bearish trend looks like drop, pullback, and it goes like this. So sellers are in control, buyers are simply reacting. And this is the same thing to bullish trend, okay? This is the same thing. Don't be confused. Now we're going to the third trend, and that is sideways trend, consolidation area. So consolidation means neither buyer or sellers have the full control. So price moves sideways. So it gets stuck inside the box and the market has equal buying and selling pressure. So this is where the beginners lose money because price is not trending, it's just ranging, okay? And me personally, I don't trade in the consolidation area because I don't know if the market will go high or it will go down. So I don't trade consolidation area. So now we are going to the second section, how to identify trends. Okay, trends are identified using simple price patterns. So this is how the professionals see the trends before the indicators do. So bullish trend structure is made by higher high and higher lows. In a bullish trend, higher high means price makes a new high that is higher than the previous one, and higher low, price pulls back but the low is higher than the last one. This tell you buyers are consistently pushing the market upward, okay? And in bearish trend, structure is made by lower high. In a bearish trend, lower high means price tries to go up but fails earlier than before. So lower low means price makes new low lower than the previous one. This tell you sellers are consistently pushing the market downward. And in a consolidation structure, consolidation has equal highs, equal lows, sideways movement, no higher highs, no lower lows. So in the consolidation area, you must wait the price to break the high or the low and then continue with the trend. Now we're going to the third section, how to draw swing highs and swing lows. Okay, a swing high is the peak of the move, a swing low is the bottom of a move. Think of swings like steps, okay? And they show the market structure. So how to identify the swing highs? A swing high is formed when the price moves up and then it stops and then it moves down. So this creates a peak, okay? And how to identify swing lows? So when the price moves down and then it stops and then moves up, this creates value, okay? So why swings are important? Swings, so swing high and swing low, tell you exactly where the market is turning. So they help you see the trend clearly, know when the trend is continuing, knowing when the trend is reversing, avoiding entering too early, avoiding entering too late, and place stop loss in the right place. So swings are the blueprint of market structure, okay? So in day 2, you understand bullish versus bearish versus consolidation, and you know how to mark up your higher highs, higher lows, lower high and lower lows, and you understand how to draw your swing highs and swing lows. So now you understand the core of foundation of the market structure. So now I'm going to show you how to draw the things that you learned today on the real chart. And I have also formula, you can see it here. So follow it if you are confused by how to begin and where to begin, okay? Follow this formula. So the first thing what we're going to do is switching to higher time frame. Why switching to higher time frame? Because higher time frames hold more value, and that's what I need as a trader, okay? I need the things that hold more value so I can trade with. So the first thing what you're gonna do is switch it to higher time frame, for example 4 hours, okay? So if you don't see clearly structure on the 4 hour, for example here, I don't see clearly structure, okay? What I'm gonna do is switching to lower time frame, for example 2 hours, and now I can see better vision of structure, okay? So this is better vision of structure. So I'm gonna draw my lines and other things on 2 hour time frame because I see a clear structure, and that is what I want, okay? So the third thing, I'm gonna draw my higher lows, higher highs for the bullish trend, and lower low and lower high for a bearish trend. But for example, here we are seeing a bearish trend, okay? Inside the bearish trend, we see bullish momentum, or yeah, you can name it like bullish momentum. Okay, we are seeing here a bullish momentum inside a bearish trend. So why is that? Okay, why is that? Because buyers are trying to push the trend so they can reverse bearish trend to a bullish trend, but the sellers have full control of the trend. So what we're gonna do is we want to trade with the sellers. We don't want to trade with the bullish momentum. Okay, you can see a bullish momentum. Many people trade the bullish momentum like here. They think the trend is bullish by seeing, for example, to our time frame, and they're seeing here a bullish candles. They think the trend is bullish. This is wrong, okay? You want to trade only with bearish moves, okay? So we have here a bearish trend, so we want to trade only with the trend. We don't want to trade with the corrections, or you can name it like recharge. So it recharges liquidity, okay? Loading liquidity, so it break the lower low. So here are the lower lows, okay? It recharge liquidity, you're recharging liquidity, and it breaks the lower low. Recharge liquidity, it broke the lower low, okay? So a recharge or correction or loading liquidity is temporary, and traders actually trade here, okay? They trade here and they lose money because they think the trend will go up like this and it will continue. But we know that the trend is bearish, so we want to trade only bearish moves. We want to trade only on sells, okay? So this is very important to understand, because the majority of people will always enter here buys, okay, buys here, and they think they will win, but they will actually lose money in this bearish moves, okay? So the first thing what you're gonna do is drawing your swing lows, swing highs, and then mark up your higher lows, higher high, lower high, and lower low. And the last one is trading only during New York session or London, because the banks are also trading in these times. Okay, so we want to trade with the banks, and the banks are trading in New York session or London session. So to able make money, okay, to able make fast money, you want to trade only in New York session and London. This is also very important, okay? So now we are going switching to, so now I'm gonna draw my lines, okay, the swing highs, and also marking up the lower high and lower low. Now I did marked my lower low and lower highs and the swing lows and swing highs, okay? So now what we're seeing here on the 2-hour time frame, and also very important thing, you want to draw your lines like where the price is now, okay? Where the price is now. We don't want to draw our lines, for example, in this side, okay? So we don't want to draw our lines in this area, okay? In all of this area, we don't want to draw our lines. Why is that? Because we are following the current price. We don't follow the past, okay? The past data, okay? So we are following what the price is currently doing. So that's also very important to do, okay? You must follow the current price and not following the past data. That's why also I marked up my my things here, and I didn't mark up my my swing highs and swing lows in this area. That's also a very important thing. And now, okay, what I'm thinking, so the price, so what I told you before, it will always have like a correction or reloading liquidity for to break lower low, okay, in a bearish trend. So now what I'm thinking is the price will go, okay, then it will make bearish structure. It will like this, bearish structure, and then it will break lower low. So what I'm gonna do is, okay, I will not take any buys in this area. What I'm gonna do is waiting for New York session or London to make for me a bearish structure and then go with the trend. But in the next videos, I will explain more about this, so you know where to take trades, where you put your stop loss. So this video is only about how to mark up your charts. If you enjoyed this video, like and subscribe, and wait for day 3.